Tarek, also wanted to ask you about a piece that you wrote in Arab News recently. Very interesting take on the state of global tariffs and ultimately how this is impacting our region. You made the case for tariffs in the Gulf. Why do you think the GCC should consider tariffs now when our region has really built itself on a model of free trade and openness over many, many decades that have served these economies quite well?
Well, for a couple of reasons. First of all, I think that the global trade dynamic has changed, and there are people out there that think, wait it out. This is a Trump-specific policy. Tariffs are, in the long term, as we know, not beneficial to economies. They reduce competition, they raise prices for consumers, they reduce choices for consumers. But I think there's more at play. I think that protectionism and economic nationalism is on the rise in many countries. And that the GCC should look at this not from a position of weakness, but from a position of strength. As you say, historically, there's been no GCC tariff policy as such. We've been very open to other countries, trading with other countries. But that's largely because the GCC countries run trade surpluses because of their oil exports. Now, that may not be the case in 10 or 20 years' time. So I think this may be a good opportunity for the GCC to revisit their tariff policy, especially when you consider that the GCC itself and oil exports are actually exposed to non-tariff barriers in the term when they export oil overseas.
So I guess the old saying is, if you can't beat them, join them. Walk me through your expectation around how much money a country like the UAE or even Saudi Arabia could raise from the introduction of new tariffs, and on whom would those tariffs be introduced?
So I think it's a case-by-case basis. So let's look at Saudi Arabia. Saudi Arabia imports about $9 billion worth of cars, machinery, equipment from Germany. It exports about $2 billion. So it has a net deficit of $7 billion with Germany. And so if it were to impose, let's say, a 10% baseline tariff on German products, it could receive about $900 million of tariffs. Now, ideally you'd want to negotiate those away and perhaps use the opportunity to increase your exports to Germany. So I don't necessarily think that tariffs are an end objective, but maybe a negotiating tool to help expand exports from Saudi Arabia, bearing in mind that Saudi Arabia has 80% of its exports coming from oil, and that's just simply too high.
Indeed. And Tarek, you're really at the coalface of this over at Nomura. You've lived in the region for a long time. You understand the diversification that's taking place in this part of the world, in particular in the likes of Saudi Arabia and maybe to a lesser extent the UAE as well. There's another way for these countries to build revenues beyond oil, and one way would be either increasing the VAT or increasing corporate taxes. I want your take on that as well. Do you think that's likely to happen anytime soon?
Well, VAT in Saudi Arabia is at 15%, Dan. That's a pretty high level, and it would make it challenging, I would say, to increase it from those types of levels. In other parts of the GCC, VAT remains at lower levels, and there's certainly scope to increase that. But I think tariffs is one way to raise revenue. You can be very selective on what you impose tariffs on. It insulates your domestic industries from exposure to taxes. So I think there are mechanisms to increase revenues in the region. Fortunately, we don't need them just yet because the region continues to be relatively buoyant, and the scope is there, but the need is not there just yet.
Indeed. And Tarek, and of course, it is the first day of September. With regards to what you're hearing from clients and stakeholders about the outlook for the rest of the year, what's the verdict when it comes to growth at this point? Of course, a lot of concerns right now about the broader macro outlook. We've been talking about valuations in the United States, for example, from an equity market perspective too. Would you say the glass is more half full or half empty when you're looking at the GCC for the rest of the year?
Well, I think the GCC continues to be, I should say, highly correlated with oil prices. The outlook is highly correlated with oil prices. And oil prices have come off in the last 12 months, as you know, Dan. The good news is that governments continue to spend money. The PIF has reiterated its objective of spending $40 billion plus a year in order to stimulate and to grow the industrial base of Saudi Arabia. And it's utilizing, various financing methods for that. We see similar efforts in the UAE and Oman and other countries where the government continues to prioritize growth in a kind of counter-cyclical way that we haven't really seen before in the GCC. So for the time being, at least for the balance of this year and into next year, I continue to see robust growth across the GCC economies, but oil prices really need to start picking up. Otherwise, there may be a lagging effect into the second half of next year.